All right, this is L. Jermaine Russell. It is, the middle of the trading day, really. This is halftime. Is June 8th, Monday at 12:48. We're actually about to, exit out of this lunchtime, but this is where, some of the stocks that were up during the day start to run up a little bit higher. Around, 12:30, maybe 12:45, it start taking a precipitous downturn. But I wanted to go over some of the stocks that I traded last week. And last week, I didn't really trade as much as I wanted to just because of like little personal things that I need to do outside of the trading world. So like with yoga and fitness and like personal relationships and stuff. So like I wanted to make sure that those things were nourished so I can come back and really trade with the full scope, full mental capacity. So I didn't really trade as much, but when it started to get towards the end of the week, I kind of forced a couple of trades, and with that force, I did lose a little bit, right? So with one of those stocks, I still am holding, and it's that stock that I'm holding is AS and A. And the reason why I'm even holding this is just because it's in the retail space. And when I saw it, like I said, this is typically, if you followed my trading up until this time or any of the videos that I've been showing you, I typically do not trade stocks where the 200 EMA, which is this red line, is above the 100 EMA and is also above the 50 EMA. I always feel like those stocks that are that down beaten or that beaten down does not really perform well for me. But recently, just because of the economic flip on the stock market, where stocks that have been downbeaten for since March 15th, when the coronavirus hit, up until now, they've been kind of this ascending upward. So this stock, I decided to kind of hold on to, even though when I bought it at in partly in I wouldn't say a haste. Yes, haste is probably the most accurate word. I bought this at a haste last week here, and I bought it at 273. Right now, we can see it's trading at 231, and the only reason why it's trading that low is, well, I would say two factors. I would take on a technical factor. The technical factor is that when I first originally bought it, it was closer to this 100 EMA. And what I've noticed with the EMAs, especially when they're on the flip like this, like I suggested just couple of seconds ago, when it's trading above the 50 EMA, which it is, and it closes above that EMA, it usually goes higher. When it was trading though on Friday, it started to trade higher and it was closing above this EMA, but before the market started to close, it started to pull back. So then it closed over the EMA. So technically, when that happens, you usually get this that happens on the very next day, which is now today, Monday. So when Friday came around, so let's go back to Friday, and we'll take a look at it. Um, we saw that it went up to this 368 area, which I thought was amazing, right? And it ran up such in a positive way. But when it came back, it came back to where I thought it would, which is this 200 EMA. And on the intraday chart, you know, this is an intraday, right? So on the intraday chart, when a stock does pull back, I typically wait for it to get to the 200 EMA because that's usually, somewhere near support, right? Or the oversold area. And as we can tell, if we looked at the RSI, it was oversold back here, right? So it was oversold here. The momentum here on that MACD was signaling that the selling pressure was stopping. So I said, great, this will be a perfect place to buy. So I bought it there. But even though there was no news that came out afterwards during that market time, there might have been some news that fluctuated, and like I said, I wasn't really paying attention, nor did I give it. I didn't give it the mental focus that I typically would on stocks, and that was almost like from Wednesday, Thursday, and Friday. Well, late Wednesday, Thursday, and Friday, I really didn't give stock market that much mental attention. This is why I suffered towards the end of the week. With here, even though that it was showing that it was going to bottom out here, I did not take notice of the 50, that green EMA. I didn't take notice of that green EMA coming close to the 200 EMA. And then typically when the 50 crosses over, or crosses below, I should say, the 200 EMA, the price will significantly drop. And that's what happened here. I was already away from my computer when this happened. So when I went to go look on Saturday, what my what my chart looks like and what my positions look like, I was actually in the negative. I was down almost $200. So right now, even though it bounced back and I was able to get half of my loss back, it still is one of those stocks that was pulling back. And even though it pulled back, it still shows some type of idea, some type of promise that it can go upward, just because it's in the retail space. And some of these stocks right now, today in the retail space, dealing with beauty, supplies, cosmetic, have been showing some promise. So I decided to hold on to this, and if it crosses over 240, which is a technical area that it should break, if it crosses over 240, then I will continue to hold on to it. It's crossed over it, but then it holds. So I'm going to wait towards the end of the day and see if it can hold over. But today it came out with news that it was filing for bankruptcy, and it was looking for ways with its lenders to figure out what process or procedures that they need to take in order to cover their debt. So I'm waiting to see what the news will come out of it. Even when I looked at the SEC filings, didn't really see anything that signified that the stock did any financial restructuring. So the most that I was able to get was that that certain of their officers were getting some type of compensatory arrangements, right? Departure of directors or certain officers, election of directors, appointment of certain officers, compensatory arrangements of certain officers. So this is what I was receiving, thinking that it didn't mention anything on its bankruptcy. So because of that, I just kind of held on to this stock, and I was in a bad position, and which is fine. And I also didn't do the research that I typically would do, just because I was now trading out of emotion. From that Thursday going into Friday, it was more of me just like in survival mode, which I am totally against. So with that being said, I had to recover. After I was now on the fence of trying to recover what I lost. And instead of just playing the stocks that I typically would have played, I would have played car, would have held out a little bit longer, and things of that nature. So I didn't do that, which is fine. I still do plan on selling this at ASNA, but right now for 2 consecutive days. So I do anticipate a test to that $3 area eventually. If not tomorrow, then later on in the week. Especially when news start to come out about their debt, right? So this is going to be a hold. I'll hold it, hold this negative position for now. I'm not a big fan of holding negative positions, but it is at a cheap price. There should be some positive news on what would be happening with their debt restructuring. So that's why I'm even talking about this, and this will be a stock that I will hold on for, further review for next week. Also, actually, there was another stock that I did not put down in here, which was CPS. I bought it the same time I bought ASNA. So let's put those two in there. So with this one, I sold today. I probably sold it maybe a little bit too soon, because I still feel like it has some upside, even though it is overbought. And because that when a stock does get overbought, today it went up to 1920, 1930, I think. But even though a stock like this, and this is in the automotive, like this is automotive parts, and I bought it purely off the technicals. I looked at the technicals and I saw that on, on this day, it not only, it's closed over the 50 EMA. That's one. Automotives have been going up. Another reason why I wanted to buy it, automotives have been going up just because of the mere fact that people are trying to use their cars a lot more. There was even an economic study that was discussed on Bloomberg and on CNBC about how people are using different their vehicles for multiple purposes. So people are, either renting RVs or purchasing RVs and converting it into not only workspace but travel space, right? So they're able to still move along and not feel stagnant in whatever city or state that they might be in. So when I saw this one, I saw it here because this is where I bought it. I bought it at 1774, and it also closed over the 100 EMA. And like I stated in the previous stock with ASNA, when you have a stock that actually closes at above, I particularly like above when it closes above that EMA, whether it's a 50 to 100. I always think that there's going to be more upside. And also, if we were to go back a couple of days, so I'm not going to go all the way back, right? Let's go back to right around here. If we go back to here, where this is on Friday. So we go back to, back to early March, late February. This is the price that it was at. It was at that same price. This was, it was already on a steady decline. So now that it was on a steady decline back then, and it's starting to test these areas now, it just gave me more confidence that it could go higher, and that it did. It went up to the 19s. Now that it is overbought on the year chart, and the momentum is still going strong. Like these two lines are just crossing over the x-axis, and I see that there's still a little bit of overhead room at this $24-25 area, more 24, right? Yeah, $24. So I have an idea that it might test 24. So I have really going to keep this on my radar, particularly with the news I just told you about. I mean, not only is it a low float where it's 16 million, it's hard to borrow, so there's not, it's hard to borrow on the Thinkorswim platform, and that it's showing some upside movement. The only thing I don't like about it is that it has a low volume, so it can be manipulated when it feels like it. That's the biggest thing that I don't like about it. A lot of short sellers could possibly come on in and start pushing the stock down, but it did everything technically. It crossed over that 1770-ish area. Because if you look back here, there goes that 1770, and then it just went up. So I could see that the next area that it would test would be 2056. And if it can break that, then maybe it can get up to 2306. But really, that next area of resistance is 2050, 2056. And, we can see it from there. But like I said, it's overbought on the year chart. I sold it a little bit too. I should have sold it when it was in the 19s. I don't even know if I should have sold it, period. I probably should have just held it. I kind of got shooken out. We'll go back a couple of days. Each candlestick represents 2 minutes over the past 5 days. And as you can tell by the way that it trades in the day before, it kind of just it will have some upticks and then start trading sideways. Have some upticks, start trading sideways. Trade sideways, have an uptick, continue to trade sideways until it has an uptick, and then then we have a gap up, right? And that gap up from 14 to 17 really was the icing on the cake for me, because it just gave me another reason why this stock has some strong momentum behind it. So I'm going to keep my eye on this one because I feel like it still has some upside, like I said. And I should have sold in the 1930s when it got there, but I didn't. So, but it still has some upside. So let's go to the next one, and I just, like I said, let's go to the next one. MLSS. Got in this one a day early, like a couple of days early. Um, you know, and like I said last week, it was a little bit rough on me, but I knew that this was going to go up, and that's what it did today. It went up higher. It was just a lot of resistance at this $2 area. Is doing every. This is the setup that I like, where the 50 EMA is over the 100 EMA over the 200 EMA. Typically, this has much more room to run higher. This is why I wanted this stock so much, and it was at a cheap price. You can't beat that. Cheap price, nice volume. I do like volume that starts at the 500,000 and then incrementally starts finding its way a little bit higher. So the day that I bought it, it was at 576,000. Then it decreased in volume to 400,000, and then started to decrease from there. So I really anticipated that it was going to go lower, but it didn't. It found more volume in the 570,000. So the last time it was at 570,000, it had a strong uptick. This is the same thing, has a strong uptick right now. It's overbought. So I just don't know how it would run, if it would run after that. And this is a biotech company. I played this a couple of times. This um, candlestick pattern is every candlestick is 1 hour, so it is going back 180 days. But I just want you to see what I was seeing, even though that here it was facing that wall at $2. If we go back to over here, that's where some of that resistance was at. So I knew that 208, 205 it was going to test, and if it tested or if it didn't, I would make educated guess or educated move off of that, and it was not finding that strength that I was hoping on that day. I even wrote that in my notes at that time. So I said that if it does break at 208, then we got 220 to contend, which it did today. And then after the 220, which I didn't write anything after that because I wasn't sure if it was going to break 220 or not, just by the candlestick. And you can see with the candlesticks, even by the hours, like not choppy, but it's really stagnant because it's like goes kind of sideways, but it kind of goes like with caution sideways and up. So I wasn't 100% sure what it was going to do, but it did it all, and that was good. So I knew that it was going to go higher. I just was way too early, which typically happens to me. I typically get in earlier than I want to, and because of that, it makes it a lot harder for me, But I can always identify the pattern. The pattern is saying that it's going to go up, but if I get in too early, then that's when I'll have an issue. So that's with that. Let me actually go to the 2-minute 5-day chart. And as you can see, once again, just like I said, it trades sideways and it has a little uptick. Very similar to which one was it? CPS. It has a uptick, trade sideways. Maybe a pullback, but continues to trade sideways. And it did have a pullback, but it was trading sideways, and it was trading. And even if it pulled back, where did it go? It went to that 200 EMA, right? So when it did pull back, it went to the 200 EMA, and then that's a place where you could buy shares, and that's I bought right where I thought it could go. Like, hey, it's been holding this $1.80 area for some time. It did have a pullback, and then it started trading with the EMAs. All the EMAs were converging here. Then it spiked, and then when it spiked, it was like, okay, good, like we're doing something. But it just couldn't hold over that 207 area, and then I end up selling on that day. And then 2 more trading days where it's just traded with the EMAs, which is probably another good indicator to even have. If you're seeing a stock that is trading with its EMAs, start to identify where the support and resistance are, and see if you can get your buy-in price at the 200 EMA. And then once you're in that 200 EMA, just wait for the volume to come in to allow the stock to start trading either above the VWAP, which it started to do over here. It was trading above the VWAP before it pulled back, but it pulled back to the 200 EMA just to go back over the VWAP. And as you can see now, it's over the VWAP and the EMAs. So, use these technical indicators as a means to understand, not only where the price action is going, but what is supporting the price action, along with the support resistance, along with the MACD and the RSI. Use those technical tools to really give you an idea of where a good buy-in price would be. So that's it with MLSS. And like I said, that is a really, really good one that, it's a good learning lesson. Even though you buy in early and you don't get the result that you anticipated, does not necessarily mean that later on it will not go higher. And so sometimes you just have to review your past trade to see what you didn't see. And that was something I didn't see. I didn't, I knew that it was going to consolidate. I knew that it was really facing that $2 area to break, and it did. But my impatience and my emotions from last week didn't allow me to stay in. So that is that one. CREX. This one, which I still believe it has some upside, but I got in and then I got out. I'm surprised it's not popping up. But essentially, I started to see some pullback on Friday, and I sold at the 290 area after buying at 295, just because of the mere fact that it was not doing what I wanted it to do. Let's go back to the year chart again. Like, if you can see, like, technically, it still has, there's a couple of things, right? Oh, there we go. It did pop up. Yeah, okay. So I bought at 313 and I sold at 298. So there's a couple of things here. So the very, very, very first thing is that even though I bought on this green day here, right, we still see the EMAs. The 50 EMA cross over the 200 EMA and the 100 EMA. Crossing over the 200 EMA is much more important than crossing over the 100 EMA, just because that's called the golden cross. So I typically look for that as something to, see if it will, not see, but use it as an indicator to know if it will go higher. So I anticipated this going higher. It didn't. I think it did during the pre-market though. So we're going to go to that. But if we also continue to look at the year chart shows that the MACD still shows some type of selling off, right? We still have some type of selling off that was happening here. So I bought in a little bit too early, and as you can see by these two lines right here, and I don't even know the real name for these technical lines, but when this blue line or the bottom line really crosses over that tannish line, that's when you know that it's a better time to buy, not when there's so much space in between. So I bought it when there was space in between. So it was only like technically that I understood that, hey, it's not really going to cross, right? And it didn't cross over, and so I should have known and sold in the pre-market. I didn't sell in the pre-market that Thursday, I believe it was. No, this was Friday. Yeah, this is Monday. So I didn't sell in the pre-market that Friday, which, I could have just walked out with a profit, I think, at 340. Yeah, it went up to 349. No, I lied. Pre-market, it's over here. So let's see if I can zoom out a little bit. Nope, can't do that. Let's go here. So pre-market, yeah, it went to 340. So around 7 or 8, I should have sold it, but I was getting greedy. I'm like, oh, I should go to 350 and then probably go higher because that's what I'm thinking or being greedy about. But it didn't do it, and because it didn't do it, I allowed my emotions to say you're supposed to do it, and it didn't do it. So it came back down. When it came down, it just started to have this precipitous fall because of like what I said earlier. On the year chart, it says that hey, we're not finished selling off. So you have to really use each time frame as a layer for the time frame that you want to buy and sell at, particularly if you're a day trader. Yeah, that's just the Brooklyn streets. Don't worry. And then I'm on Nostrand Avenue here, so it's like when I face the I'm facing the street and my window is open because it's a beautiful day, and then you get some cars blowing. People are out. Coronavirus is non-existent now. But anyway, that's besides the point. So, like I was saying, you have the stock that now you want to take these layers of time frames and start looking at when you should buy and then when you should sell. Um, like this was just really a really, really, really good day trade, if anything. And I failed to execute on that. Um, I could have just taken that day trade from, when it pulled back. Look, it pulled back. What happened? I bought it near the 200 EMA. Bought it near the 200 EMA. Next day, boom, what happens? It goes back up. It goes back up, kind of trying to test this 350-ish area, goes to 340. Could have just taken the 35 cents a share and called it a day. I didn't. I even bought more shares thinking that, hey, it was going to go a little bit higher, but it didn't. And that's fine. It's okay. I'm not too worried about that. So I end up taking the loss because I saw that, and this is probably key here. This is probably the key, the biggest way to identify when to cut your loss, because cutting your loss is probably the most difficult thing to do for most traders. Even with me on ASN, I'm trying to find reasons on why I shall hold this, just because, and as you can see, it's coming back to that resistance of 240. But I'm trying to figure out reasons on why I shall hold it, because I either I don't want to waste a trade, or I feel like that there's more potential that the stock has. So going back to what was the name of the stock? CRXE. Sorry. So going back to CRXE, I saw that even though it had this precipitous drop and it came down to $3, I said, okay, that's fine. It should bounce, right? Because when I looked at the RSI, it showed that, hey, this could be just a morning panic on a Friday, even though most Fridays, especially during this whole Corona time, it has really been a big sell-off. Like stocks are up during the pre-market. Let's go to car, right? So just this is an example. Car that was this is today. Car during the pre-market, not only it went up on Friday and it went up to $31, but then it pulled back, and then it went up again. It went up to $33, but it had that pullback initially when the market opened on Friday. Because so you have to really start thinking of when the stock is up during the pre-market, how much higher can it really go once the market really opens, and then once the market really opens, like where do you feel like it could drop to? So I thought it could drop to $3, and it could. It started to test the EMAs here, and let me just zoom in just a little bit more. It started to test the EMAs. So even though it was below the 200 EMA, and the MACD was showing that, hey, you might be entering, not just you might be entering some bullish sentiment, and we're finishing some sell-off. It was still trading below the VWAP, and the 50 EMA was crossing below or crossing underneath the 100 EMA, and then it was starting to come to the 200 EMA, and then that's where I really started to say, you know what, I'm cutting my loss here, because once I started to see that 50 EMA come to the 200 EMA, that's when it's going to go lower. So just like the reverse, right? If the 50 crosses above the 200 EMA for what is it called, the golden cross, then that's when we have an idea that the stock will go higher. And the same thing, if the 50 crosses underneath the 200 EMA, I don't remember the technical term, but essentially the stock will go lower. So that's what happened here. and and then once you start seeing that EMA is coming to the 200 EMA as a day trader, typically this is a good place for you to identify when to cut your loss. You know, so that is a really really good example of when to cut your loss on a trade and to be disciplined, because you don't want to, even though I might have taken some small losses, I could have taken much more bigger losses if I, held on more. Like, I could have held this and then sold in the 280s. And even though it's starting to come back up now, why waste my time and money on a stock that is not going to hold because of what I said on the year chart? On the year chart, we said that, it still has some selling to do, and that's what it's doing. So just honor that and not be stubborn when those things happen. I think Mark is a good one to go over. Where did I sell you at again? I sold you here. I don't know what the price was. Let me just zoom in real quick. See if I can see the price. That's one thing I really need to learn how to scale these charts so I can see above or below. So I remember getting in this trade and really believing that not only it would trade above 335 intraday, but it would go higher to 4, and it didn't. This was that Thursday, and on last week Thursday, it really had a morning panic, and it panicked all the way down. And once again, what happened? You see this gold. You see this cross. You see the cross where the 50 EMA crosses right underneath the 200 EMA, and then it just started to go down from there. So as opposed to really just doing a day trade, it's not like I don't have day trades. I have day trades, but I'm really trying to get into the habit of picking stocks that does not force me to use these day trades. But I should just used it and then just called it a day, but I didn't, and that's why I ended up losing. Because even though I bought it, I bought some at 303, and then I bought a little bit more at 311. I could have just taken is not a word. I could have taken my 20 cents a share and just called it a day. But in hindsight, I wasn't thinking about 20 cents a share. I was thinking, hey, how is this going to move a little bit higher on Thursday? And it didn't. It pulled back. It might have had this move right here pre-market, but once again, when the stocks move in the pre-market, only sometimes have I really sold in the pre-market, and during those sometimes when I sell in the pre-market, I do tend to see it go higher later on today. So this was one that I kind of anticipated, and that was the same thing with CREX. Kind of anticipated going a little bit higher the next day because it showed that uptick, but it didn't do what I thought it could do, and therefore I had to let it go. And basically for the same reason as CRXE, that 50 was crossing below the 200, and it was showing me that this is not a stock that I should hold my money into. So I just ended up taking a loss, probably a little bit more of a loss than I really could have considered. I could have just more considered selling it at $3 a share, but I didn't. So I sold it at a little bit lower at 290-ish, and right now you can see it's at 264. Let's look at the year chart so we can get full clarity on why this stock technically is starting to move a little bit lower. So even though it had the first green day here, and it did all the things that I anticipated it doing, well, not doing, but it has all the technical supporting higher upswing. Like the 50 is above the 100 and the 200. It has all those things, right? The biggest thing that I do not like that Mark has is that his float is near 100 million, and it's harder for me to really understand how stocks move when they're more than 50 or 60 a million. So when it's above 50 or 60 million, it's harder for me to really gather if it's going to go higher. And that's more of something I just need a little understanding, and it could be just me being nitpicky and not really understanding its movement. But even so, the MACD was showing that and that the stock was coming closer to a pullback, and that's what it was doing. It wasn't showing any opening here. It might have like a little space, but not enough to suggest that it was going to retest this 350 area, um, which it tried to do. It tried to test really closer to 340 because it pulled back at 335 during the after hours on that Wednesday. But other than that, there was no other reason for me to hold on to this stock or even really play this stock, just because of how volatile it has been in the past. I tried playing it before, and you see, I bought it at 94 cents and I sold it at 98 cents. Wasn't sure, and I missed this whole stupid ass run up. So like, so that was frustrating in itself. So I figured that, hey, this is the first green day, just like how it was first green day after a couple of red days. Well, no, this was a red day and then it had a green day, but after successive red days, it had a green day. So bet it should go higher. It didn't go higher. It pulled back, and based off of what it said here or what it did here with the MACD, that should have been a clear indicator that it wasn't going higher. But it wasn't as clear, so I had more of my optimism in play than following if this is a sound technical play. And then I should probably do one more, and this is the one. This is why I typically sell in the pre-market, and this is why I typically do not buy stocks that are below $1. INUV. So INUV, I sold this pre-market because it just was not passing what I thought it could pass. I thought it could go a little bit higher, but this is something that I'm going to look at again to trade later because it's having this 50 cross over the 200. And like I said, when that happens, typically there is some type of upside. And then now that it has its first green day after 2 red days, maybe it can go higher. It's not overbought. The momentum is still a little bit strong, and there's some space in between these 2 lines, right? That blue line is above this tan line, and it's showing a little bit more of upside. So if we go onto the intraday chart, we'll see one that is spiking for today. But two, it was not breaking that 80-cent area, and I was starting to get afraid. I bought it here at the 65 cents, and what was it? 450 shares that I bought. And when the market opened, and this is why, like I said, I typically sell during the pre-market. It just wasn't breaking this 80-cent area, and I don't like stocks that are below $1. When they're below $1, it really, really makes me nervous. So the only thing I could think of was like, hey, this stock has been running up, and let's go to the hour chart. Let's do one of these. So, it found resistance here at 43. 43, 45, I should say. Found some more resistance right here, 48.50, 48 cents, 50 cents. Then it spiked. Found resistance here at 60 cents, and that's where it is now. It pulled back, and then it ran up, right? And on this run up, being that it went from 50 cents to 70 cents, that is a strong run up. So that means it's overbought, and it's overbought on the hour. Because it's overbought on the hour, things was telling me, hey, you're too overbought on the hour. The market hasn't opened. I don't know how I really, really feel. And I'm not a big fan of buying stocks when they're already overbought on any time frame. Whether it's the minute time frame, whether it's the hour time frame, or whether it's the year time frame. Any of those time frames, I do not like buying when a stock is overbought. So when I bought this and saw that it was not only overbought, but that it was finding resistance at 80 cents, and the only thing I could do was like, you know what, just let it go. And literally, like, moments later, it tanked. It tanked so bad where I was just like, woof, I am so glad I got out of here, right? So, like, if we could, let me just scroll back a little bit. Where we could see here, right, we had this run up, which was good. I like the run up. But once it was like here and not doing what I wanted it to do, this was what, 8 a.m. So 8 a.m. and then right around 8:40, yeah, 8:45. There goes the tank, and that tank just like went. It just smacked it all the way down with that public offering, and there goes a whole bunch of weakness. It went down to 46 cents. Its previous resistance that it was at not too long ago, a couple of days ago, right? Right around here. Like right around here. So it was just bad. It was just bad. So you have to be real careful when you see a stock that runs up so strong, it's underneath $1, especially if it goes like 40 cents, 50 cents, because at any given time it can do one of these offerings, and because it does an offering like that, you'll have the stock like want to get money out of its investors, out of his day traders, out of his degenerate day traders, as Tim Sykes would say. So like that was a good reason why I got out, and I'm glad I did. So hopefully what I've shown you, I've spoken so much so far, but hopefully the things that I've shown you has been helpful. I know I didn't go over Blue Apron or CGen. Actually, what happened? CGen, I bought at 1677. I should have sold at 1785, but I was greedy, so I sold at 1712, and then we see the pullback. So that was something. Even though I could have earned a whole lot of more. And Blue Apron really been a tough stock for me. I've tried it a couple of times. Just really hasn't, like, I really have not found the flavor of the month when it comes to that. I bought it at 1387, sold it at 1240 something. So it's just one of those things that it's not where I wish I could play it better. I always feel like it can go higher, but for some odd reason, this is about the second time. Yeah, this is the second time where I tried buying it and thinking that it was going to run up, and it didn't. Maybe it does another run up later on. I don't know. Very tough to play, so I'm just going to leave it alone for now until I can get comfortable understanding its price action. So I've spoken for probably about 40 minutes now. This is my review over the stocks that I've traded for the past week. If you have any comments please like or subscribe. If you have any comments, please leave it in the comment section. And if there are any stocks that you ever say, hey, I want you to go over, I know that some of these stocks are not all the same. Typically, I trade biotech stocks. But as you see, I dabbled a little bit in with automotives for the past couple of days, and soon I'll be, you'll see on the next video, I'll be looking at either some of the beauty stocks like ELF or Coty, that's ELF or COTY, just because of how the industry is moving. So if there are any stocks that you want me to look at and to say, hey, how do you think the technicals work with that, I'm always open to learn. So yeah, just keep the options available and open, and never stop learning. So until the next video, happy and safe trading.